How Bitcoin's 2011 to 2026 journey defines the future of crypto. Bitcoin vertical spike could be the biggest story in modern financial history. No one imagined that Bitcoin, released as a side project of computer scientist Satoshi Nakamoto back in 2009, and seen for years as nothing more than an online curiosity, would evolve into financial asset, with ramifications for sovereigns and institutions alike as well. Millions of everyday investors worldwide. Well, the early years of Bitcoin were a grand experiment. Then came the transformational few years from 2011 to 2026. Within these years, Bitcoin moved from a niche pseudonymous currency to the layer zero for whole crypto economy. It survived major crashes, regulatory challenges, security concerns, and rampant skepticism, emerging stronger from every cycle. Bitcoin is now considered as the digital gold and the backbone of global crypto economy. Tracing the evolution between 2011 to 2026 could be key to understanding how cryptocurrencies are redefining our perception of finance. Bitcoin. The early years 2011 to 2013. Interest in Bitcoin really started to pick up around 2011, with interest primarily coming from tech devotees and early investors who believed in the potential of a decentralized form of money. It was also an important year for the Bitcoin price, which passed $1 for the first time. Needless to say, it was a small-scale achievement relative to the valuations of today, but a landmark moment in the history of digital currency. The only places that taught people about Bitcoin, the concept of a decentralized finance, spread through tech forums and social media to a widening audience. Early adopters were convinced that Bitcoin was a force of financial disruption, one that could undermine traditional banks. First price boom of Bitcoin in 2013, the price of the cryptocurrency soared before eventually surpassing $1,000. Such a rapid climb also caught the attention of the public and was even reported by the international media, opening it up to people who had no idea what was going on in the cryptocurrency market. As Bitcoin gained in popularity, cryptocurrency exchanges like Coinbase offered a simple way for new investors to buy and sell Bitcoin, but it has had a massive level of price volatility, even to this day. The market melted up to record highs, along with lashings of punishing corrections wedged in between. These price swings, highlighted by the October 2023 face-melting highs, the cryptocurrency market was still in its infancy and would require more time to achieve mainstream adoption. Collapse of the Bitcoin market 2014 to 2016. Holding Bitcoin has been far from smooth sailing. The worst came in 2014, when a cryptocurrency exchange called Mt. Gox went belly up. Holders trusted their Bitcoin to the Mt. Gox exchange, located in Japan, run by a Frenchman. Not your keys, not your crypto. This was at a time when Mt. Gox processed the majority of Bitcoin transactions globally. At Bitcoin fairs, people witnessed $100 Bitcoin sliding down to $30 within hours. Soon after, panic rippled through the cryptocurrency community as word of a massive hack of the platform spread, and hundreds of millions were unaccounted for in its accounts. This led to a move among investors, entrepreneurs, and developers to operate under stronger security protocols, better infrastructure, and more specialization. Gradually over time, to the amazement of many skeptics, confidence returned to the Bitcoin ecosystem. This came at a time when the altcoin mania started, where there were multiple copies of Big Daddy Bitcoin, from gold to silver to red to black. It truly was the Wild West in the cryptocurrency market. Despite negative coverage and soft market conditions, the Bitcoin community had a hard-to-shake belief, as all they were focused on was building something great for the future of decentralized finance. Then came that period, 2018 to 2020. So-called liquidity crisis and crypto winter. Following the boom witnessed in 2017, the crypto marketplace then experienced what had turned into a brutal stretch dubbed as the crypto winter. However, this tumultuous time also fortified the diamond hands of Bitcoin holders around the globe. Speculative projects lacking any real technological merit evaporated from the marketplace, leaving many serious developers and companies building infrastructure for the long haul. In other words, 2019 to 2020 began demonstrating unprecedented levels of institutional interest into Bitcoin. The big boy pants brigade had now arrived in force. Investments in crypto started to look good for big companies and financial hegemons. Companies like MicroStrategy and Tesla and Square began buying Bitcoin as treasury reserves. It was a paradigm shift in thinking. Bitcoin was no longer just a speculative asset favored by techies. Instead, it began gaining the legitimacy of a potential store of value, aka digital gold. Bitcoin as digital gold 2021 to 2023. This led to the path of least resistance for mainstream finance, with banks and other financial institutions pushing out sub-investments, offering products such as wealth portfolios for Bitcoin. Traditional investors leverage Bitcoin without actually buying or holding the digital asset. It was also the time when wealth managers such as Grayscale Investment created Bitcoin trusts that collected billions of institutional money. Technological evolution of Bitcoin. Perhaps none were more significant than the Lightning Network. This allowed Bitcoin transactions to increase, making Bitcoin more readily available for faster payments. Currently, there are over 1 million nodes around the world supporting the Bitcoin blockchain, and it has become the most hack-proof decentralized network of the modern era. Bitcoin in the modern financial landscape, 2024 to 2026. Banks and hedge funds began pushing cryptocurrencies to their clients via their platforms. It was the period in which Bitcoin was finally recognized as a credible investment vehicle of the corrupt financial markets. Cryptocurrency exchange-traded funds and custodial services for digital assets made it possible for participants to venture into the crypto economy through monitored financial instruments. Bitcoin was already a bigger part of the world's financial infrastructure. A range of merchants were adopting Bitcoin. Blockchain apps lowered the friction for cross-border transactions. The intertwined nature of these developments ushered in a new age, one where cryptocurrencies and traditional finance now sat within the same financial architecture. How Bitcoin manages to define crypto's future. Bitcoin, during a new decade 2020 to 2030. Don't believe everything you read about Satoshi Nakamoto or crypto. There's a lot of FUD out there. Over the years, as Bitcoin expanded, government entities with their so-called regulatory frameworks around digital assets. It is their view that with real regulation it could reduce volatility and create a more stable crypto market. That last sentence I don't believe at all. Institutional adoption is also going to continue for the next century. Bitcoin is being traded by large investment firms and banks. They see Bitcoin more as an asset in the long term rather than speculation in the short term. Today, disruptive blockchain technology applications are emerging outside the financial sector. Beyond voting technologies, supply chain management, healthcare systems, and digital identity solutions are currently underway for a 1980s future, it seems. In conclusion, every test has only made the crypto ecosystem stronger. Fast forward to Bitcoin today. It has become the backbone of the crypto economy and have long-lasting effect via blockchain technology on innovation. Decentralized finance is a kinetic catalyst for the future of finance. Really, who knew? Remember that the naysayers have lost so many times they cannot be taken seriously anymore. Remember, nothing in this video is financial advice. Always do your own research. Here is a quick new update. The billionaire investor said he sold most of his Bitcoin after concluding the cryptocurrency failed to act as a hedge during recent geopolitical turmoil and dollar weakness. Really, who cares? He is a billionaire. Ethereum's identity crisis is deepening after high-profile brain drain frustrates the community. What began earlier this week as shock over more exits of core figures has now evolved into something more existential, according to some community members. USCFTC secures deal with National Hockey League on prediction market safeguards. MoonPay expands into tokenized assets and DeFi markets with new platform for banks. Peer-to-peer trading startup Variational raises $50 million for real-world perps in funding round, led by Dragonfly.